All right, David Prince, welcome back to Benzinga's pre-market prep. How are you doing today?
Good. How are you guys?
Good. Do manic Mondays, do they lead to terrific Tuesdays? What do you think?
I think we had a lot of our terrific Tuesday back half of the day and pre-market, which is kind of not unusual. Everything gets sped up, and I think most of us know a lot of what maybe 5 years ago would have been a great Tuesday was back half of Monday and pre-market today. So same concept, same theory, just sped up a little bit.
Yeah, that's what I was saying when we started the show here earlier, David, is like everybody's expecting the Nikkei was up, this market's going to rip or higher. Well, it kind of did that yesterday because EWJ was already up yesterday. We knew the Nikkei was going to rebound, and that's why the S&Ps rallied almost 200 handles from their pre-market low. I feel like we already had the bounce. Like people are coming in expecting a bounce.
Computers all are set up and have seen this story play out in different, time frames over the decades so many times that I just find when we go through an event like this, that's macro, the result is sped up, right? And then we have to kind of see where everything falls and go from there. So I think we just had our amazing bounce. Now
I think so. So some people are asking, what are you doing today here? And I'm like, well, today's not as easy as yesterday. It felt like yesterday at the open, we were washing out and we could be a buyer, and I was buying stocks at the open. But today I'm like, I don't know. It's like you've bounced already. So you're kind of in the middle of nowhere here. So I kind of am almost like a sit on the hands type of day, maybe fading some moves, maybe there's some chop. That's how I'm feeling. How are you approaching today?
I am feeling the same. Yesterday, I was very aggressive, not because I thought it was the final bottom, but because I thought there was a trade that I could bank on to some degree. So I was really aggressive, and I was really aggressive about selling. And I was really aggressive about selling in the after hours yesterday. That move after hours was crazy. I was in NVIDIA, StockSell, and TQQ, and I was selling all of them. And this morning I was selling some NVIDIA at 104. I'm down to a trailer on all of them at this point. It's, I think we had our move, but I always tell people that first bounce, I don't want to say you can count on, there are no guarantees as we know, but you can kind of bank on it to some degree versus the second, third, and fourth bounce. Yeah. Then it gets 5 times harder. I always have people like, I missed NVIDIA at that spot. Will it happen as easily? I'm like, no shot in hell. It's like the first time is the easiest. After that, it's much harder.
So you're out of most of the positions that you bought yesterday. Then.
I still have some NVIDIA, kind of like you. I always hold a core. Yesterday, pre-market, I was buying at 4 in the morning at like 97. Yeah. Trimmed some at 101. Bought it back at 97. On that open to 91. I'm sure you guys saw it was stuck there for a minute. I kept pressing buy. And on the way up, I sold, most of it.
We got a special guest in the background there.
Oh, we got one of my dogs. Yeah.
Oh, yeah, cool.
Yeah.
My wife's a dog addict. We saved dogs.
Okay. Talk strategy a little bit in executions, because it's so hard to, on those kind of opens. And I looked at, I looked at the futures, and I was like, I didn't want to buy the opening print because I knew there was going to be a wiggle. And I just kind of looked at the mid range from the low to the high there. And I'm like, well, I'm just going to throw my bid out there. And if it gets hit, it gets hit. If not, I'm going to have
NVIDIA or SPX?
The mini S&P, okay. The S&Ps. I mean, do you put out multiple orders, to try and scale in, or do you just say, man, I'm going in at this price. I get price improvement. If I don't, I don't.
I go half on like Qs. I didn't. First off, I did Qs yesterday, and I thought through it. I said, a lot of people are talking about the relative strength in SPY and the Dow, and on day like yesterday, I want what's oversold that has quality. And I thought SPY is actually dangerous. We might play catch up to the downside along with the Dow. So I just looked at the Qs. And I saw 429, the 200-day. And I said, odds of us holding are probably not great, but I have to buy some there. And then where is my downside below that? And I saw 420 and I saw 412. 412 was when actually I was a first guest on here, and I was buying around there, whatever it was in April. And I said, okay, so that's my downside, and that's where I'll fill my position. And if we're down that much, I'll be very comfortable buying there. It'll actually be half an investment, half a trade. So the answer is I put in no bids, right? And I literally go with a half a position. And then if it keeps coming down, I'm willing to buy some. But it's only because I only have a half a position. If I try and say I'm going to be right,
this is it.
Yeah, out on the way down.
Yeah.
So we didn't go to 412, obviously, but I was pretty comfortable. And by the way, I did it through TQQ. So the bounce, I could kind of not wait for 10, 20 points to make money. I had a decent amount of TQQ from 51 to 49. So by the time we were at 52, I was up quite a bit of money. And at 55, I was like, ah! So I was quite tight. And I still have a teeny bit of all of them, but like Dennis said, I think a lot of people are going to get chopped up on a day like today. They're going to start turning down, then we're going to go back up. This is not like, these are the days you grab your cojones yesterday to make money. So today, when there's nothing to do, you literally do nothing. I think today is going to be really boring and annoying, and there are going to be a lot of traders who lose a lot of money for no reason. That's what I think happens today.
So, yesterday the term dead cat bounce was being thrown around a lot. Well, at what point, David, can you start like say we go down again today, and then we give up some of those gains? How do you know, I guess, where to come in and start buying, looking for another bounce, or would you rather just kind of wait on the sideline, raise some cash? Like how will you play this volatility if it persists throughout the week?
That's where like being a money manager comes in to me. Like when valuation actually on a few names is to a degree that, hey, this is cheap. Like there were people yesterday talking about Apple and do you buy it and why is Buffett selling it? I'm like, when he bought it, it was trading at 12 to 14 times earnings. It doesn't grow and it trades at 30 times. Mm-hmm. So just because it's off $10, I get it, it bounced, but honestly, it's not by most like valuation metrics. It's not a cheap stock. I get it. It throws off a lot of cash flow and it's king and it's an amazing company. But beyond that, there's not a lot of value. So when value comes in, that's where I'm a buyer. So I don't see that in the S&P except for lower. I don't see that in the Qs except for lower. So for me, it's going to be like, okay, Meta, that was a really good quarter. At what level am I willing to own it as an investor? Because it's just cheap. And regardless of the indices, I'm going to own it. And my downside will be X, because even if the indices go down, it has a valuation support. In terms of the indices, to be an investor again, I don't know. It feels lower to me. I'm not excited here. SPY's barely down 10, wasn't down 10% till yesterday. Q's 16%, so that's why I went after them. For me, it's going to be, hey, are we down 15, 20%? Is this a real correction after? I mean, a lot of people forget the Q's basically doubled in 2 years. They traded 260. We didn't quite get to 520, but that's a lot. So to me, this is kind of run of the mill. So I'm a trader, 100% a trader right now. I'd say 80% of the time I'm an investor. Right now I'm a trader. So the answer is not yet, and definitely lower, Aaron.
Got it. So, but if the market continues to get hammered, then we'll start seeing more and more of those types of companies that have valuations where you can justify.
500, Q's 412, 415 to answer more directly. Right. I'm at least an investor in a quarter, 30% of a position. How's that? Like levels. At least I know those levels that interest me.
And then talking about NVIDIA, because you said you always hold a core position in NVIDIA. I mean, if all you did was just look at the valuation from where it's at right now, you could still say it's pretty expensive, but of course expected to, report strong earnings again later this month. And so like you're willing to pay kind of that 30.
Let me ask you a question.
Yep.
Are you going on this year's earnings? Are you going on price to sales? Because forward earnings, it's not. Unless we're all wrong on their forward earnings multiple. Right.
I'm just saying the forward PE right now is 38. I'm saying I expect that to come down lower after the company reports strong earnings the end of this month. So I'm saying that's a type of stock where if it goes down, say NVIDIA goes down 10% again, you can say, okay, wow, now this valuation is very attractive
80,
to me.
I mean, we all see that spot. If it got to 80, I'm willing to bet that the multiple comes down and it's actually well beneath its growth rate, its blended 5-year growth rate, and I'd be a really kind of comfortable investor. But like Dennis said, in this type of environment, when you can fill a gap, go to 101 pre-market, go to 120, what the hell are we worried about? Or at least for me, what the hell am I worried about investing? I'm not saying I bought it at the bottom. I did, but I'm not saying I sold it all at the top. I sold plenty at 108 into that gap, 107, then 112, then 120. But when you can make that, so let's say blended, I made like 12% on NVIDIA in 24 hours. What the hell am I worried about investing in it for? So NVIDIA, to me, specific name, in those 80s, I'd be really excited, and I'm willing to bet. I don't care if there's a delay, not a delay. I'm willing to bet that the multiple comes down, at least on forward earnings. I get it, price to sales. If you look at strictly that metric, it feels expensive, but to me, it seems like it's not.
General question for you, David, and just because you brought this up, and I've fought with people on Twitter for years, and one thing I will say is my trading, my day trading and swing trading is so much more consistent than my long-term investing. And people think I'm nuts. They think, oh, day trader, you're just a gambler. And I'm like, it's really not. I mean, when you can find your edge, and you just talk about, grabbing 12% on NVIDIA, why invest? And if you can grab 12% here, 12% here by market timing, people really believe out there that you cannot time this market. That, it just doesn't exist. You have to just invest in all these day traders. 99.9% of them lose money. Can you give an argument? Because I've tried to argue with these people. I don't know, but I think you're kind of on my side.
Let me ask you a question. You're not really talking day trading because you trade like I do. You're talking short-term swing trading, 2-3 days.
Both.
Right?
Both.
Okay. Because I think with day trading, it's tough because we all know a lot of that after hours and pre-market is where the money's made very often.
Yeah.
So I will say I think a day
overnight trading
is more tough. Short-term swing trading, I feel I have an edge. And I think because I can look at macro, look at news flow, look at upgrades, downgrades, charts, and in a very short-term time frame, have a better result than most, I have my edge, and I agree with you 100%. I think if you strictly say day, it's really hard. I actually think I'd underperform because very often it's that overnight move or pre-market move.
Yeah, I do a lot of overnight trading. Like that's I almost should say overnight trading because it feels like the overnight tradings are easier. Like, and I've argued this before.
For me, it's my meaty spot is like 3 days to 2 weeks. And I really can have great returns in that spot. If I'm an investor on everything a year out, I'm so average, it's not even fun.
The things that can happen in the longer time frames, and I'm going with you on here, Dennis. I mean, you could have the best technical fundamental setup on something, and the yen carry trade comes into play, and completely, yeah. I mean, there's no way to predict that, right? Because there's so many things, and we talked about this on the show yesterday. The things that set up on the way. Do you think we would have had as bad a day yesterday if Warren wanted to dump half of his Apple position? I mean, you kind of had we talked about it a little bit on Friday that there was a possibility of that, but the market closing on the lows for the week, a potential of Iran-Iraq war. And then Warren comes in and he ain't buying anything. That's the other thing too. I mean, we'll look at maybe look at the Oxy chart for us, David, and before we let you go, we had a Warren zone in here on the monthlies where he's been coming in. I don't know if he's been nibbling. It was big volume. It wasn't huge volume yesterday, but I mean, fundamentally, decent cup, but technically here it looks like a little bit of a breakdown.
So I get scared of these positions. I'll tell you why. Because everyone's buying for the same exact reason. It feels like a crowded Warren Buffett trade. Now, we don't have to worry about him. Obviously, he knows what he's doing and he's the best. But I actually don't love it because it's the Warren Buffett trade, because no one's really buying it because oil's going to work or because they really believe it's going to 100. And when it's a narrative story versus a fundamental story with a backdrop that actually makes sense on multiple and so on, you can call it cheap, but it's not as cheap as it's been versus where oil is. So to me, it's more of a narrative trade. I'm not so excited. I think it can go lower, especially if recession is real.
The one issue I've got with Oxy here now, and I have not bought this, really level. I'm day trading, and I actually have a position on just day trading it right now. But no long-term position here at this 55 to 58 because it's been down here so many bloody times. I mean, this has worked like.
Dennis, Do you
so many times.
When you see the same level over and over, I have like a rule. That means it's going to get worse. If it was special, why do they keep revisiting it?
Yeah. They don't give you this many. Guy Adami maybe says it the best. He says they don't give you this many chances to buy.
That's the way I look at it. The prettiest girl in the room does not hang around waiting for you, right? She doesn't just say, "Oh, like wait till everything's cool." So I am always concerned about that when you were.
No, they do for me, but
you're special, but not me.
He is special. He's very special.
All right, David, we're run up on time here. Before we let you go, do you want to talk a little bit about this webinar that we have a link for in the description, as well as the QR code up on the screen here?
Sure. A little bit about money management, like how I handled a day like yesterday. Why, if you look at my Twitter, it says, hey, as an older guy, the sequence would ideally be that down open Monday, turnaround Tuesday, how to play it. In other words, I'm sure you guys who are old school and know your stuff, you're not running around buying long-term options because the IV is so insane. That's not how to make money. So example, yesterday, 90% I was stocks because I didn't want to pay the IV, and you get a bounce and you're even. But how to use it. So yesterday, the one option trade I did for my newsletter was I went with weekly calls because it's the only thing that made sense. And I didn't want to go crazy with IV. So when I saw that 91, 92 on NVIDIA, I bought 98 calls, right? And then not worrying about how high it goes, I saw 50, 75% and I was done. So it's a lot about how to adjust to the market climate, not to get nervous on a day like yesterday, and kind of view it as an opportunity and set yourself up in advance. So when it happens, because it's not like we didn't have hints. Like I said on Thursday, when NVIDIA goes up 20 and back down 15, that's not healthy. The trader should love it. I mean, I loved it. I'm sure you guys did. I said an investor should take it as a time to be cautious. And it's kind of using the hint so you can plan ahead.
All right, David. Well, it's always a pleasure to have you on. Enjoy. Good luck in the markets this week, because obviously there's probably going to be a little bit more
SMTI tonight for NVIDIA, guys. Definitely.
Yeah, big print for it.